Hey everyone, it's Mike, and you've made it to the last lesson. This is lesson number 5 of the Order Flows Delta Trading course. And in this lesson, I'm going to wrap up everything I talked about Delta, and we're going to do some exercises on reading Delta. What's going to happen is I'm going to give you a few moments to take a look at a chart. I have over 20 charts here, and make your thoughts of the Delta that you're seeing. Then I'm going to talk about what I see in the Delta. Then we can compare notes, and you can see how far along you are in your study of Delta. Again, if you're struggling to see things in Delta, I would suggest you take another run through the course. I said it's not a very long course in the sense that it's going to take you a few days to go through it. It's going to take you just an evening, and I really want you to get up to speed with using Delta in your trading, and I really feel the exercises are going to help you find out where you are. I said if you're seeing a lot of the same things that I'm seeing, fantastic. That's the whole point of this course. If you're still struggling to see things that I'm seeing, then I suggest take an hour or two to go through the course again and get up to speed. But before I begin, a brief disclaimer: this presentation is for educational and informational purposes only and should not be considered a solicitation to buy or sell a futures contract or make any other type of investment decision. Futures trading contains substantial risk and is not for every investor. An investor could potentially lose all or more than the initial investment. Risk capital is money that can be lost without jeopardizing one's financial security or lifestyle. Only risk capital should be used for trading, and only those with sufficient risk capital should consider trading. Past performance is not necessarily indicative of future results. Alrighty, so by now you should understand how to use Delta in your trading plan, and you should be understanding how to analyze the Delta. That's the important thing, is being able to look at a chart and see the Delta and make a decision based off of it. Now, generally with me, I'm always looking at Delta confirming a move with Delta and price going in the same direction. Now, that doesn't mean that it's always going to be going in the same direction, because there are other situations that I also look for. I look at Delta moving but price not moving, or price moving but Delta not moving, and I look at instances where Delta and price are diverging. Now remember, Delta helps to paint an overall picture of what's happening in the market, but it also helps to show you areas where things are happening that you just wouldn't notice on any other form of analysis. For example, iceberg orders. I talked about this in the first lesson. Iceberg orders is a form of aggression, but it's aggressive behavior by a trader as opposed to aggressive buying or aggressive selling. But the beauty is the iceberg orders will show up in the volume. Once it's traded, everything will show up in the volume, and that's obviously the big difference between trading on a dome and trading using a volume footprint chart, in the sense that with the dome you're just looking at potential trades, whereas everything that's traded will show up in a bid-ask volume footprint chart. Now, when Delta is moving or growing in either direction, but price isn't moving yet, that's telling me that there's absorption occurring, and I'll be looking to trade in the direction of price once price starts moving. Now, for example, Delta is getting more and more negative, but price isn't moving down, right? Why isn't price moving down? Is because bidders are absorbing all that aggressive selling. And what I would be looking for is, I say I look for prices to go up. Now, I would look for prices to go up once that selling ceases. Basically, once those sellers realize, hey, we're not able to move the prices down, or they just realize that there's a lot of support here, so people stop selling into that support. Because what's going to happen eventually, if that support is really strong, it's going to start showing its strength and get bidding. The market is going to start to get bid up. So I would look for prices to go up, because one, the support is real, and two, the sellers, they're not stupid. They realize they can't push the market. They're going to stop selling. Why should they sell if they can realize that, hey, you know what, I got strong support here. If I just back off my aggressive selling, I could sell at a higher price. So I'd be looking for prices to go up. When price is moving but Delta isn't strong in that direction, then it tells me that aggressive participation in the move is weakening, and I'd be looking for signs to trade in the opposite direction. For example, I would look for strong opposite Delta over the next few bars when the market is going up, but it's going up on weaker Delta. Basically, it tells me the aggressive buying, it's still there, but it's just getting weaker. And then I'd be looking for the Delta to turn negative, either at the high or maybe a bar just after the high. And then I'd be looking for the strong negative Delta to come in that tells me that selling is taking over. Now, when delta and price are diverging, either in a bar or on a chart, that's going to indicate to me that if it's within the bar, that there's a change of supply and demand, and I look for a trade in the direction of price. So imagine you have a bar that starts out very negative delta, very strong negative delta, okay, minus 1,000 negative delta, then finishes the bar at positive 1,000 delta. The bar closes up, bar closes higher than where it opened, I'd be looking to trade in the direction of price. Price is going higher because we have aggressive buyers came into the bar late. Early you had aggressive selling, later on you have aggressive buying. Just like when you have a divergence on a chart, you have a new or equal high and you got negative delta and you got a red candle. It's telling me that at this point, we hit our high of the day, but now you have aggressive sellers coming into the market. All right, it's telling me that supply and demand have changed in that bar. The whole supply and demand paradigm has changed from demand driven to all of a sudden supply driven, and to me that's very important information. So now we're going to do a quick exercise. I'm going to give you a chart and I want you to look at the delta, think about what you see and how you would trade it. Make your notes, print this up if you haven't already printed it, and then I'm going to explain what I see on the chart, and then you can compare your thoughts against mine. Again, if you haven't printed up this lesson, please do, or at least get a pad and paper ready so that you can make your notes, so that you can compare what you see versus what I see. Okay, so this is the first chart, exercise number 1. Take a few moments to take a look at the chart, take a look at the delta. Don't necessarily get caught up in looking at the price action on the chart. What you should be focused in on is the delta. So I'll give you a couple seconds to take a look at the chart. Okay, if you still want more time, just hit pause. But what I'm going to do is I'll start talking. Okay, well, the most obvious, obviously, up here you have the delta, right? Most order flow software, delta divergence rather, will give you this, will draw a triangle. My software draws a triangle. So that draws your attention to a divergence up here. But you have this whole big move up here, right? If you're not watching the delta, you're maybe not keyed in on this move up. And what you have over here, just before the big move up, is you have a delta surge. You got minus 19, plus 89, plus 630, plus 815. This is really the move that you'd like to catch. Of course, obviously, you'd like to catch the delta divergence to catch the move back down, but you can also catch that move up. This is a delta surge right in here around the 12 o'clock time. Minus 19, plus 89, plus 630, plus 815. Okay, next chart, lesson number 2. Just take a minute, not a minute, but a few seconds to analyze the delta here. Okay, so hopefully by now, obviously, again, the divergences are easy to see if you have good software. It's got the little triangle there for a divergence buy, another divergence buy. But what do you see? Okay, you see some positive deltas in here. You see 970, you see 816, then you see a change here, 860 and 176. Now, this one is a little bit, again, you got to be a little bit more up to speed with understanding delta, but what you have is strong delta, and in this bar, you had a strong delta of 1174 positive. It ended up negative at minus 860. And then obviously next bar is negative. It was a strong negative earlier. It still ended up negative, and then minus 549 here. But you're seeing in here with these 3 bars, you had strong positive delta. The first 2, we close near our strong positive delta. And then this one, it changes from a very strong positive delta, 1174, to a very strong negative delta. And then the negative delta continues as we continue on selling down. But this bar right here in the middle at 1342, at 142 in the afternoon, is a delta reversal bar. Okay, exercise number 3. Just take a moment, see what you see in the delta. This is a crude oil 5-minute chart. Okay, so you see a big move up, right? What you like to do is obviously catch that move. So What are you seeing in the delta as you're analyzing through the delta? You got minus 248 plus 36 plus 533 plus 1135. This is a delta surge, but this is also a transition. You got the negative delta, kind of a strong negative delta, then a small delta, and then a strong positive delta. And again, it's the delta surge as well. You can see the delta getting positive 36, 533, 1134. You even got another delta surge happening immediately afterwards, minus 184, then positive 60, 121, 1099. As we come up here, you don't have a divergence, because it's just not a high where this red candle is. It's off by a tick. But then you start seeing the negative deltas come in on the way back down. On the move up, it's all positive for the most part. On the move down, it's predominantly negative delta. Okay, exercise number 4. Take a moment to see what you're looking at in the chart, and then I'll talk. All right, so what do you see? All right, now obviously, again, you see the divergences here, which are the obvious ones, but take a moment to analyze what you're looking at. You have 1212, you got a strong positive delta. The one follows it, 339, is obviously not very strong. And at one point, this bar had 1276 positive delta, max delta, which is actually stronger than the previous bar. But we only managed to close at 339. To me, this is a sign of the weakening delta. It went from 1212 to 339, but the max delta had increased, but the buying just wasn't there. And in fact, you got selling coming in. It's about 900 contracts to wipe out, that extra 1,000, right? It's not 1339. It went from 1276 down to 339. So that's a loss of about 800 contracts. And then in the next bar ends up negative, and the next bar negative delta even stronger as the market starts selling off. So you're going up, delta is getting weaker, aggressive buying rather is getting weaker, delta in the sense of positive strength is getting weaker, but on the way down it's getting stronger, minus 278, minus 545, minus 2000 as the market sells off. All right, exercise number 5. Take a second to look at the chart and tell me what you're seeing. Okay, this one is I think is pretty obvious. Hopefully by now you should see a few things. What do you have? Markets coming down. You got minus 1392, minus 834 right on this low here. You got minus 42, and then plus 313, plus 450, plus 506. You also have a flip in here. In a sense, it's negative and then it goes to positive. It's more of I think this is more of a broader shift, but really what I'm looking at is this minus 1392, minus 834, minus 42, 313, 450. I don't need to wait to 506. I should be already getting ready to be getting long just after this turn, coming in here with the positive delta in this bar at 450. Okay, exercise number 6. Alrighty, and what do you got? It's right here. 1045, 326. Delta is still positive, but it's getting weaker. And then it turns negative, minus 237, minus 893, minus 1143. You got 2 bars with 0 min delta, 2 bars with 0 max delta. And we're closing right on our min delta numbers here. So it's told me that it's gone from very aggressive buying to very aggressive selling in the max and min sense, as well as the final headline delta number getting weaker, 1045 to 326 to turning negative, 237 minus 893, and 1143. I wouldn't consider this a delta reversal bar. It went from plus 490 to minus 237. while those are extremes in this bar, you know, if it was like minus 14, positive 1490 to minus 1237, yeah, I'd consider a reversal. The volume is just a little bit too light. Like I said, you know, you need, for a reversal, you really want stronger numbers. Otherwise, you're going to start seeing reversals everywhere, which is not what you want to do. Okay, so exercise number 7, just take a look at the chart, and then we'll go from there. Okay, so this is delta flip. Hopefully you can see it here. You got positive delta finishing at 2361. The max delta is 2407. The min delta is 0. Then you got intervening bar, and max delta is 0 in this bar, but min delta is minus 1545, and the final delta closes at minus 1545. This is the delta flip with an intervening bar in the middle. You've got 0 and 0 with the bar closing on the max and the min deltas. Okay, exercise number 8. Just take a look at the chart, and then we'll discuss what we're seeing here. Okay, well, you should see down here you got the strong negative deltas, minus 1350, minus 1035, then minus 2141. And then it, you know, right on this low, strong negative delta, and then it starts turning positive, 509, 845, 1314, right in here. So we're making a shift from the supply-driven market as the market's going down to a demand-driven market. You even have a delta surge going on in here as well. Exercise number 9. Okay, well, obviously you have the divergences here. You can see the green triangle, green triangle, green triangle. Now I'm not going to get into the ratios with the divergence, but I just find ratios with divergences are much stronger. But I put this chart in there because, you know, usually I've been showing you charts and it's sort of in the middle where I see something in the delta, and I wanted to confuse you a little bit, mix it up a bit. But it's up here, actually to the right of the chart. You can see as you're coming into the high, you get that last push up, 922, went from a positive delta of 250 to 992, and then it got a little weaker, 522, and then minus 528, minus 1125 as the market starts selling off. You know, would I consider this a flip? This would be borderline. I mean, you got 0 in the min delta here in the bar with 992 positive delta, then positive 17 with a negative delta of 528 against 662. But over here, this is where the activity in the delta that was very telling. I put this in there because I really want you to sit here and struggle and see, well, yeah, you shouldn't be able to really see anything discernible other than the divergences in the delta here. Okay, so moving on to exercise number 10. Okay, so what do you see? This is E-minis is a 4-range chart. Right up in here, you have a flip going on. You got 1219 positive delta with a max delta of 1222, min delta of 0. Then the intervening bar in here, it actually went from positive delta of 400 to a negative delta of 370. But here you got minus 653 is the delta with a max delta of 0 and a min delta of 655. This is the delta flip right here with the intervening bar, and you see how the market sells off. Now again, you know, over here people say, well, do you have some flips here? No, I wouldn't consider this one a flip. Over here, I mean, final delta is 118 versus max delta of 441. Even here, minus 239 versus a final delta of 772. This wouldn't qualify as a flip. They were too far removed from the max and the min deltas. Okay, so exercise number 11. Just take a moment to see what you're looking at here. Okay, a couple things. Hopefully you'll have seen them. So here you can see the delta is getting a little bit weaker, minus 610, minus 162, positive 32, positive 855. Now, what's happening in this market is we're kind of going sideways here, sideways to grinding a little bit higher. Then you got a little bit of selling coming in here, minus 610 in the delta, but then only minus 162, and then a positive delta, 32, and then a nice strong delta, 855, as we take out that previous high of where you had the negative delta. And then we start working our way back up. And then you're getting in here, you got a flip, you got negative delta of 434 versus a min delta of 464. And you got a final delta of 677 in the next bar against a max delta of 717. And then even the next bar, it's all positive delta as we move higher. Okay, so exercise number 12. Okay, what do you see? You see a couple things. One, you have a delta surge here that failed. It's a buy. I don't say failed, but it had a little bit, it sold off a little bit more before it rallied up. But then you got another delta surge. This time you have a delta surge sell, 68, minus 5, minus 188, minus 385. And then boom, the hammer drops minus 1200, minus 700. And then you continue on selling down. But like I said, you also had a delta surge buy here, minus 315, then positive 41, positive 79, positive 176. But then it's just met with, strong selling, a negative delta of 505. But then we sort of work our way back up. Then you get the delta surge sell coming in over here right before you get the big hammer dropping here. When I say hammer, I don't mean candlestick hammer pattern. People will write to me and say, "Oh, where's the candlestick hammer?" No, what I mean is, you drop. There's a saying, you drop the hammer, you drop the boom, so to speak. All right, so exercise number 13. Take a moment to see what you're seeing, and then I'll talk about it. All right, so what do you got? You got the market selling off. Delta is getting weaker, minus 2198, minus 1359, minus 637 on the low, then plus 29, plus 155, plus 959. Fortunately, this market just sort of went sideways, tested that low, back up to sideways. So, even though the delta was there, it didn't really get the move that you're looking for. I mean, you can see the delta getting weaker. Honestly, I would expect the move to be more up, but I want to put this chart in there so you can see, there's times where unfortunately the market doesn't always do what you expect it to do. Sometimes it just ends up going sideways. Okay, so exercise number 14. Just take a moment. Okay, so what do you got? Well, obviously you got some divergences cells here that fail. Okay, again, that's why I prefer them with ratios. These are just your normal order flow numbers. But earlier on this move up, you got negative delta 204, then positive 127, positive 1931, and positive 3781. This is a surge right here, delta surge. This is a 5-minute E-mini chart. And then we make a nice, beautiful move up before you run into these deltas that fail. Okay, exercise number 15. Let's take a minute. Read the delta. Okay, so this one's a little bit harder. I've shown you a lot of delta surges actually, or transitions and flips. This one I consider a delta reversal bar right here, this bar with a ratio of 1185. And what you had strong negative delta early, minus 962. And then it ended up positive 1016 against a max delta of 1016. So it was fairly strong in the negative sense early, and it ended fairly strong in the positive sense. then the market made its move back up. Now again, in the previous lesson, lesson number 4, I went over a bunch of different order flow trade setups. But again, I don't expect you to memorize all of them or use all of them. Find the ones that are easy for you to understand and see in the delta. Hopefully by now you should be seeing certain patterns appearing over and over that it's going to help you in your trading. So exercise number 16. All right, let's take a look here and give you a second to gather your thoughts. Okay, this is a 5,000 volume crude oil chart. And what do you see? You see this sideways action, but watch the delta, minus 99, plus 38, plus 127, plus 390. Market's going sideways, delta's getting stronger in the sense of aggressive buying, 38, 127, 390, preceding this nice move up from, the 69.80 area all the way up to the 70.50 area. But to me, this is the giveaway right in here. But, like I said before in the earlier lessons, oftentimes there's nothing in the sense of direction, or I'll say direction, but nothing in the sense of delta giving you something solid to trade off of. But then, all the pieces to the puzzle just sort of line up. It's like when you take a puzzle that's not put together, you dump it on the table, and you have all the pieces laying out. But then sometimes you see like 3 or 4 pieces that just go together, and this is what it is right in here with the delta. Okay, so exercise number 17. Hopefully these things should start to jump out at you. Okay, well, hopefully a few things jumped out at you. On this move down, watch the delta. 297, getting a little weaker. 144, 48, and then negative delta, 696, minus 436, minus 252, positive 42, positive 82, positive 220, positive 347 as you're making this move back up. Okay, so this is all of it in here. This is literally the market following the delta. Even though this market is selling off, it's selling off on smaller positive delta. So the buying is just getting weaker. Not necessarily sellers are in control of these bars, but then once sellers come in control, you can see selling getting weaker. Aggressive selling rather is getting weaker. Minus 696, minus 436, minus 252, minus 42. Then positive 82, positive 220, then 347. I don't think you necessarily need to wait to this positive 347. I think this is a safe area to trade in here when you get the positive delta of 220. So you catch the move up from 25 all the way up to 50. Then you sort of run in here. I wouldn't consider this a flip. 412 against 714. Then 914 against 920. This 412 versus 714 is just a little bit too far removed from me. This is a 5,000 volume crude oil chart, so that's why some of these bars are longer than others. All right, so moving on. This is an E-mini 5,000 volume chart. This is exercise number 18. All right, well, hopefully you could have seen this flip in here. You got minus 2279 delta against a min delta of minus 2660, and then positive delta of 1459 against a delta of 1451. Unfortunately, it just went sideways over the next several bars, and then it sold off. So this one, again, I want you to see some instances where it doesn't work. It doesn't line up and work perfectly, because not every time it's going to work perfectly. World where everything we see on a chart pans out and gives you 100% trade accuracy, but there's nothing 100%. Things change in the market. And again, if you weren't stopped out by the time you got down in here, what I'd be looking for after this flip is I'd be looking for positive. When I start seeing negative deltas coming in, final wait till it gets down in here to stop at negative deltas when I should be expecting to see positive deltas. That's, the market telling me that it's going to work out.